Okay, good afternoon, everyone. Welcome to Bert's orientation class. Bert is a broker and good friend of CFRN and a bit of a mentor for me. He's going to come in this afternoon and he's going to walk you through the platform, the charts, the indicators. He's going to answer any questions that you have, whatever they might be. Now, as you type your questions into the chat box, if it's something that I can answer easily, with a couple of keystrokes, I will. Otherwise, Bert will answer it, and he might choose to address it. Even though I type you in an answer, he may want to elaborate on that a little bit and go deeper in regards to, what's actually happening with that question. Whether it's about the platform, whether it's about one of the indicators, or even our methodology. Okay, that's important, our methodology, why we do what we do, why do we use an 8-tick stop, all those kinds of questions. Anything that's on your mind, Bert's here to answer those questions today. Today is the 29th day of June 2015, and it's 4:07 p.m. Eastern. Bert, I will go ahead and pass the charts to you.
Okay.
If you're ready.
Yeah, ready.
Okie doke. And I'm going to hit mute on my end, and so it is. I can see your screens. It's all yours.
Okay, guys. As Dwayne said, if you have questions along the way, just type them in the box. I'll address the questions and go into detail. The whole idea of this was, it's somewhat of a orientation in which here's the feedback that I get a lot of times. Guys will go into the training room day one or day two and then just get blown away by what's going on. Maybe they're not prepared, ready for it. They see a screen that's similar to this, and Michael taking off trades, putting it on. They're seeing, buzzwords being thrown out there like BBC, momentum trade, 137B, all these little buzzwords going on. And they kind of see the screen, get overwhelmed, and either they turn it off or they just go about their business and never come back. So what I thought I would do is slow it down a bit. Talk about DT Pro. This is the platform that I use. DT Pro. Dwayne and Michael use the same platform. So I'm going to talk about putting the indicators on and off using this platform. The question might come up, hey, but I'm a Ninja guy. I love Ninja, and I am not going to leave Ninja. What say you? And my pitch to you would be, if you're comfortable with it, stay with it. If you need the CFRN files for Ninja, let me know or Michael know, and we'll email them to you. What I would say is DT Pro has the same bells and whistles as Ninja. It's got a direct route to the exchange. I think the biggest thing you'll find is support behind it. In other words, if you have questions about setups and the platform, instead of emailing Ninja and waiting for a response, you can actually pick up the phone and call Leslie and I, or we could do something like we're doing now, where we just do a screen share and we talk about the setups, or how do you draw a trend line and all that other jazz. So the support will go beyond what you get, I think, with Ninja. So that's why I'm going to stick with featuring DT Pro, because that's what Leslie and I support. So my goal today was to go over the trade setups, show you some examples, maybe how to take indicators off and on, and then answer your questions. So if you are going to attend the live trade room this week, maybe you have a better understanding of what's going on. If you're already a member, maybe slowing it down, maybe, a light bulb goes off in your head. The whole idea is to educate you, so when you see a trade setup, you have confidence to take the trade, or, you just have a better understanding. So that was the goal. And so, again, if you have questions, just let me know, and we'll tackle them one at a time, okay? So let me get down to the bare bones minimum. Okay. So again, this is the DT Pro platform, and this is the basic outlook workspace. Okay. So if you have DT Pro, the first thing you have to do to get the CFRN indicators on a chart is you have to enable them. And the way to do that is you right-click in the chart, go to Indicators, and go down to the Indicator Store. Left-click on it, and what will happen is you'll get a little box. All right. Let's see if I can't duplicate this. There we go. You'll get a little box. All right. It'll look something like this. Expand the box so you can see what's going on under the hood. And then what you'll find is the CFRN indicator set inside. Now, all the heavy lifting has been done for you. All right. All the donkey work has been done. All you have to do is right-click over it and hit Install. Okay. Once you've done that, you'll get a green check mark next to it. And what the platform will do is it'll tell you to log off and log back on. And what you have to do is just close out the indicator store, hit File, log off. Here, let's just go through it. Hit Exit. Go to File, log back on, and put back in your password. Okay, now you're inside the platform. You know that because on the bottom left-hand side, it says it's connected. You have live quotes quoting, and you have a chart that's running. Okay? Now what we want to do is apply the indicators to the chart. All right? So we're halfway through. So you right-click in the chart, go to Indicators, and now you have a CFRN setting here. You want to set CF_CFRN. Left-click, hit OK, and that will apply the CF_CFRN setup. Okay. What you see here, and these are the buzzwords that you'll hear from Michael and myself and Dwayne. The red and the blue line, okay, is called the MA1. The green line is called the BBC. What does BBC mean? Bullish bearish cross. All right. So the red and blue line is the MA1. The green line is the BBC. And then you have this black jagged little step line, and that's just what it is, a black step line. And I'm going to show you some rule sets using that. Okay. So this is called the CF_CFRN set. It's right here. And then the next one is the slingshot. So you're going to left click there, hit OK. And the slingshot is going to measure what we call in the trade room divergence. All right, divergence. All right, what does divergence look like in the cycle? Okay, let me blow this up. This is a good example of divergence. Bullish divergence. Blue is bullish. The green line pulling away, think of a slingshot. And the whole idea is for the green line to pull away and snap back eventually to the blue line. Okay, that's what that means. This is a good example of bearish divergence. Ignoring the chart above, guys. If you are a member, just ignore everything inside the chart. But just looking at this, okay, this is a good example of bearish divergence, where you have a red line. Red means bearish for CFRN, guys. Blue means bullish. And we have the green line, again, like a slingshot being pulled away from the cycle here. The whole idea is for the green line to pull back and eventually work its way back to the cycle. All right? Similar to this. This is bullish. Pulls away, back to the cycle. All right? That's what divergence means for CFRN, guys. Now keep this in mind. CFRN, what they're doing inside the trade room is they're not trying to pick tops and bottoms like David would. All right? They're momentum traders, right? So divergence means if the market's going up in a certain direction, all right, they're going to be buying pullbacks, all right? So the market advances, pulls back, advances, pulls back, advances, and what they're doing is they're going to be buying these dips as long as we have divergence. All right, that's what that means. Same is true on the way down, okay? If the market's going down, 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 okay, they're going to be trying to sell this, this, and this on the way down as long as there's bearish divergence, all right? That's what they're doing, all right? What they're also doing is they're trying to, they're going for ticks and not points in the market. Notice that this chart is a 4-tick range chart. What gets confusing to some people is, first of all, the platform is probably set for, let's say, 5 or 10 minutes. What you'll have to do is you'll have to come here, click the drop-down box, and go down to custom. And the first thing people will do is they'll say tick bar, and they'll change this to 4. And they'll look at it and go, man, this doesn't look like Michael's at all. Well, what we work on is a range bar. So don't get confused. You're not going with the tick. You're going with a range bar and make that set to 4 ticks. Okay? A lot different chart, different looking chart. Okay? Every candle is 4 ticks in height. Okay? You'll always have an up candle or a down candle, a close. All right? That's the basic CFRN set that you see here. There's other things inside the toolbox, all right? But again, the purpose of this webinar was to keep it simple, is to go over the basics with the basic nuts and bolts that are built into this. So what you see here is a chart. This is the mini Russell chart, okay? The chart is set at a 4-tick range, not to be confused with a tick bar chart. You see the CF_CFRN indicator applied to the top. And you also have on the bottom the CF slingshot down at the bottom. And this is going to measure divergence. All right? This is all you really need. There's some other things going on, but that's all you need. All right? So that is the setup. Once you have this, you're ready to go. All right? I have everything on a single workspace, all right? Again, Michael has all his charts floating, and that's just what he's comfortable with. In the end, that's what you're going to have to do. Organize your workspace to the point where you're comfortable navigating and placing orders and, you know, to a point where, you know, you're just ready to trade, okay? Once you find that space or that, you know, that workspace, what you want to do is go to File, Workspace, and Save As, and just give it a special name. Okay. Per the rule set, all right, everything's being executed on the DOM. Okay. The DOM, just like Ninja, has a bracket feature, and it also has a strategy feature. Okay. If you look at this, everything has an 8-tick stop attached to it, okay? Buy stop, sell stop, 8 ticks, 8 ticks. So what that means is every time I go into the market, the platform will automatically set an 8-tick stop behind it, okay? That's what the bracket order means, all right? The platform will do that for you. Furthermore, if you need some extra discipline, the platform also has a strategy structure to it. In other words, if you get in, it'll place a stop like it does here. It will also place a target above, and it will also move the stop up and trail it for you. That's all done on the platform, off the DOM. And it can be programmed that way. All right? I did a little video that features this. This one was called the Francis because one of the members, I think his name is Francis, did one, where what it'll do is it'll actually place the 8-tick stop loss. It'll trail it. Once the market moves 8 ticks or 4 ticks, it'll move the stop to break even. And if the market keeps going up, 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 the stop is going to trail behind it automatically for you. It's going to create the discipline that some people don't have. All right. So the DOM has all the bells and whistles to it. The platform has all the bells and whistles to it. It's just a matter of practicing and executing. So that's it. Once you have the chart set up, once you have the DOM set up, you're ready to rock and roll. You're ready to place orders and look for setups. Okay? Michael's in the room from 8:30 to 10:30 Chicago time. All right? If your time permits it, I would definitely hang out for that 2 hours, because I don't think you're going to learn trading the S&P or the setup or anything else by reading a CD or an ebook or what have you. It just doesn't work that way. I think being in front of the screen, watching the screens, watching the personality of the market is going to help you a lot. And seeing Michael take trades off and on is going to help you. What I don't want you to do is come in thinking that you're going to shadow Mike for 2 hours and go golf for the day, because that's not what CFRN is about. All right. Some people are doing that. That's fine. Guys that talk to me, they know, I'm not a big fan of that. I think what you should do is, if you're going to take this serious, to give this a go, you're going to have to get your hands dirty. So that means you're going to have to download the platform. You're going to have to download the indicators. And you're going to have to take trades off and on. And as Dwayne points out in his trading plan, that you should be practicing before you go live. And here at Daniels and Leslie and I, we don't pressure you to put live trades on. We don't have inactivity fees. We want you to be comfortable to the point where you're comfortable placing an order and being able to, manage the trade from point A to E. So, so that's to that point. So the whole idea is to go into the trade room, because it's like watching a movie, the rerun of a movie over and over again. At some point, you're going to know the words before they say it, and that's where you want to get to that. You want to get to that point where you can say, Michael, there's a trade in the crude. It's a bearish setup, and as soon as you can start pointing those out, I think then at that point you're probably ready to actually go live. All right. So for 2 hours a day, Michael's in there and he's taking trades off and on. It's a live atmosphere. From time to time, he will go fast because he does have a goal, and his goal is to get his points and improve that it could be done in a live setting. Throughout that morning, he will take a pause and go over the setup. Okay. Like I said, the purpose of the whole webinar here is to slow it down. Michael's trading in fourth gear. We're going to try to do this in first gear and then answer any questions. Okay? So let's go over the setup. We've talked enough about the platform and setting it up briefly. If you have questions about the platform, you can always call us at the desk and we'll go over it. But what I wanted to go over now is the setup. This is what you're going to see in the room, and this is what you'll see every day, and I've seen for the last 4 or 5 years. It's the same setup. Okay. One or two things are going to happen. All right. The market's going to go up, like I said, and we're going to try to buy dips, or believe it or not, the market's going to go down, and we're going to try to sell rallies, and we're just kind of going to go with the flow of the market, and we're not going to try to pick tops or bottoms. All right. So I wanted to show you this because I think this was created. This is 2002 or 2012. All right. This hasn't changed. So this is the nuts and bolts of one of the trade setups. So number one is we're looking for a cross of the MA1 of the BBC. Again, one of those buzzwords, okay? When the MA1, the blue and red line, cross the green moving average, or the BBC, that alerts you, I need to get short. Okay, you're in sell mode, okay? And one or two things are going to happen. The market's going to get to a point, and it's either going to rally a little bit, go to the BBC and fail, or it's going to rally a little bit, get the pen, it's going to rally a little bit here and not quite get to the BBC and then fail. All right? So again, everything starts with the cross. The market's going to at some point get to a bottom and gravitate toward the BBC and then fail. Or at some point, the market's going to get to a bottom here, attempt to get to the BBC and fail. And then you have two decisions to make at that point in time. All right? So number one, we got the qualifier, so we're on alert to get short. And the first thing you do is wait for the market to either flag and get to the BBC, and what you're looking for is a down close in a bearish scenario. So a touch of the BBC and a down close will tell you to get short. All right? The next order of business is to look down at the slingshot and look for bearish divergence. All right? That means the green is pulling away from the red cycle. Notice this is red. We're in a bearish scenario. So is the cycle. Everything's color coordinated. All right? So once the market gets up to the BBC and you get a down close, let me repeat, a down close in a bearish setup, you look down below, and if you have bearish divergence, you're going to go short. All right? Now, as soon as you get short, you have a DOM here, right? And you know that everything has an 8-tick stop attached to it, just like this picture says. All right? And that'll do it. Okay? It'll place a stop for you. Okay? And then the money management part is pretty simple. Once it goes 4 ticks in your favor, okay, you're going to move the stop down to break even. All right? And if it closes on the other side of the MA1 like it did here, all right, if it's not 4 ticks, it might be more than that, you're going to move the stop to break even. And as the market moves down, you're going to trail the stop, until at some point this green line, like I said earlier, gravitates toward the cycle. All right? And at this point, you should be taking your profit, or you should have it real tight where no matter what happens, you're going to take something from the market. All right? So again, bearish cross says I need to get short somewhere. Where's that level? Against the BBC, as long as there's a down close. If we have the down close, do we have bearish divergence? It's present. I need to get short. Once you get short, the platform will automatically place an 8-tick stop attached to it, and then it's just money management. Plus 4 ticks or close below the MA1, you move the stop to break even. And as the MA1 gravitates toward the cycle here, that's the point where you take profit. That is the trade, one of the basic trade setups that's been in place for roughly 3 or 4 years. All right. That's the one he uses every single day. It's a little bit quicker and faster in the room, but that's it in first gear. Now the next question is, well, what if it doesn't get to the BBC? Okay. Because that does happen. You don't get the picture-perfect trade every time. All right? You don't get the one that, gets to the BBC and fails. Sometimes the market has so much bearish or bullish momentum, it won't get there, and then you'll have to deal with that. All right? Here's the Russell today. All right, 4-tick range, right? Okay? Everything starts with the cross, right? Here's the bullish cross right here. Okay? You get a pen here. Okay? There's the bullish cross. Okay? Market gets up to a point and starts flagging. Looks like it's going to get to the BBC. We're getting closer, But it doesn't quite get there, right? So what we're told to do in the trade room is to draw a trend line. Now, how do I draw a trend line on TT Pro? You go to this little figurine here that says line. You left-click on it to engage it. Your browser turns into like a cross there. You left-click, hold it down, and draw it, release. Okay? So once we get a close above on the other side of the trend line, this is the point where you're going to get long, right here. Okay? Do we have some divergence? Yes. Is it optimal? Does it look like this? No, but we'll get to that trade. All right? So we got a bullish cross. We got a market that's gravitating toward the BBC. You and I don't know if it's going to get there or not, so we have to constantly be drawing trend lines in the event that it doesn't. Once we get a close above the trend line, we have bullish divergence. The trade's on its way. Okay, you enter it. Everything has an 8-tick stop to it. If it closes above the MA1, the stop moves to break even. And as the market moves further and further up, you just trail the stop behind it. Okay? The platform will place a stop for you. The platform will also trail the stop for you if you wanted to. It does all the heavy lifting for you if you want. Okay? All right, let's go to some more examples here. Okay? So basically, we just real briefly went over two setups, okay? We went over the one where it just goes to the BBC and looks picture perfect, which we'd all like to see every single time. And then there's one where the market gravitates toward the BBC but doesn't quite get there. All right? Again, another example is where the market gets to a point and it starts flagging toward the BBC. Automatically, you should be drawing a trend line off the tops. And the tops mean the top of the wicks or the corner of the candles, okay? All right? Once you get a touch of the BBC, okay, we get an up close in this example. You look down below, right, and look for bullish divergence. All right? Is this blue? Yes, it is. But wait a minute. There's a little bit of a twitch here. It went from blue to red. What happens? What do I do? Do I start panicking? No. If it's blue, the close of this up candle, you're going to get long. If it turns red, you just wait for the next candle and make sure it closes above the downtrend line. Okay? In either example, it's a bullish trade. Again, same rule set. 8-tick stop, close above the MA1, stop moves to break even, and as the market moves up and this green line gravitates toward the cycle, that's the point where you'll take profit. Okay? The CFRN goal is to get $100 a day. Okay? What you're going to experience in the room is a lot of break even, +1, break even, -1, break even, +1. And then what you're doing is eventually looking for that runner. Okay? That's what you're looking for. All right? So you're going to have to get used to breaking even a lot. You're going to have to get used to the market going down, hitting your stop, and then going in your favor. That'll frustrate you a lot. Okay? It's going to tempt you to break the rule. It's going to tempt you to not move the stop. So instead of getting break even, +1, break even, +1, you're going to start seeing -8, -8, +4, -8, +8, -4. You're going to have bigger stop losses. And then you just threw the rule set out. All right? So it's important that you stick to the rule. It's important that you practice the money management, or you and I will be having mentoring sessions. You'll have mentoring sessions with Dwayne and I. Okay. Another big question is this just for the indices? No. What if crude oil? Here's another crude oil. Let's see what happened here today. Here's a perfect example, okay? Bearish cross, that's number one. Market goes down, right? At some point, the market starts flagging, okay? We're looking for it to touch the BBC and fail, right? We don't know that's going to happen, so we have to draw the trend line. So if you already are a member or you've been in the trade room or what have you, you have to practice drawing trend lines, all right? It should be second nature. So as soon as that market gets to a point and starts upticking and a bearish trend, you need to start drawing a trend line. That's what needs to come. You should be, boom, coming right here and start drawing a trend line. It should just be instinct, okay? All right? So you start drawing the trend line, okay? And then we finally get a break of the trend line, right? That's on this candle. Do we have divergence? Yes, we do. Why? Because the cycle is red. We have space for the market to move lower. We have the down close here. Everything has an 8-tick stop associated with it. And a close below the MA1, we'd move the stop to break even. All right? This wasn't the big winner. Okay? This was probably more of a break-even trade, but it qualified. Everything was there. Okay? And not every trade is going to be a winner. Not every trade is going to be perfect. The market's going to, give you grief.
I think that trade had some profit in it, didn't it?
Yeah, it might have. I mean, it might have been 1 point or a couple ticks, but
Well,
the
if
bottom line is
you
it.
go all the way over to where it dropped off there, see the swing low to the right?
Mm-hmm.
I mean, I don't think you got stopped out. It would have taken a lot of patience, but I don't think it ever pulled. It never drew down 8 ticks before it finally dropped and gave you 8 ticks. Is that a crude market you're in, or?
Yeah, I just picked crude because.
Okay, so that's a 10-tick market.
Yeah.
Did you see the question from Arvin? Do you buy above the high of the bar? I'm not sure when he actually asked that question.
Arvin, if you're referring to the trend line, that's why we're constantly drawing trend lines. This is the same crude chart, but a bullish posture. Okay, we have the same bullish cross here that sets it in motion that we need to get long. And like I said, at some point the market's going to get to a peak and pull back, right? And we really don't know if it's going to get to this BBC or not. So what we see is just this in that time period, all right, until eventually, in this case, it breaks. It actually touches the BBC. But what this trade is lacking, okay, is it's blue turning to red. And when the cycle is not coordinating with the bullish posture, then we need to wait to get above the break of this trend line. Okay? So to answer your question, do we buy above the high of the bar? If that's referring to the trend line, then yes. In this example, we do. All right? Because the cycle here has went from blue to red, and it was offering some doubt. And so we wanted to see further confirmation. And once we did, we got long, and then we wait for the market to go up, and then we move the stop accordingly. All right? So that's, hopefully that answers your question. Okay? And not in all cases. All right? You don't have to. All right? So again, I went over just 2 setups. The one where it comes back to the BBC, and the other one where it doesn't quite get to the BBC because we don't know that's going to happen and falls apart. In any of those 2 scenarios, you have to be ready to act. And doing that, you have to get used to drawing trend lines. And like I said on DT Pro, you left click over here where it says line, get to the top of a peak here, you see the crosshair, right on top, left click, hold the mouse down, drag, release. Okay? Practice doing that. Even if it's just, just practice doing that, because that's a big part of the trading philosophy.
Trend lines are free. Your platform comes with an unlimited supply each and every month.
That's right.
So draw away.
Yeah. So here's soybeans. I'm going to go through a few, and then we'll maybe answer more questions. And it might be redundant and might be boring, but this is the stuff you have to get used to seeing. You need to see this every day and look at it and read the chart, because this is going to get you to, as Dwayne said, on the other side of the 10% line. Okay? So here, let's take a look at this one. Bearish cross here. Okay? We got a cycle that's coming down. I'm liking that. The market starts flagging. Okay? You have to draw the trend line. Do we get a close below the trend line? Yes, we do. Do we have a red cycle here? Yes, we do. Do we have divergence? Is the green line? We have space? Yes, we do. So everything qualifies here, okay? We would get short right here, okay? The market went down 4 ticks. This probably would have resulted in a break-even trade, but it is what it is. It qualified. We took the trade, and that one probably would have broke even. So, hey, I'm just looking at random charts just to give you an idea. Remember, we're going for ticks in the market. We're not looking for, points in the market. At some point, you do get runners. All right, there's potential runners here, and so that's why you're looking to get the break-evens +1, break-even +1, because at one of these times you'll catch one of these runners and get 10, 12, 15 ticks in a row. All right, and that'll hit your goal for the day. All right. Here's another picture-perfect one in the beans. Bullish cross. This one touches the BBC. And what we like about this is that we like this formation of this candle here. All right. A nice little, the dragonfly doji, or not dragonfly doji, almost looks like a hammer. But anyways, we like that type. Okay. And down below we have bullish divergence. All right. Everything qualifies here. So with the close of this candle, we're trying to get long here. All right. And this one went up pretty orderly. So this would have been one of those runners that would have yielded, some possibly 4, 5, 6, or 7, 8 ticks. Okay. So this is kind of like the poster child. This is like the picture perfect one that you'd like to see. Okay. That's the one you like to see. All right. So those are the 2 that you'll see in the room just about every day. The buzzwords that you'll get used to hearing are BBC, which is this green line, MA1, which is this blue line, divergence. What is divergence? The green line separating this little area here. Think of a slingshot. All right. You'll see bullish divergence, or you'll hear words like bearish divergence. All right. And there's one other trade that Michael does, which gets a little bit confusing, but I'll try to show you here, is what's called a momentum trade, where everything starts with the cross. Okay, here's one, a bearish cross here. And what happens is the market has so much momentum, or in this case weakness, it either flags, all right, or it gets to the BBC. It's like pushing something over a cliff. And what Michael will do, all right, is if the market is on the other side of this MA1, okay, here's the MA1, okay, it stays on the other side of this MA1, they'll draw a trend line as soon as we start flagging, like you did here, and with this down close here, okay, this is going to trip. It's called a short trade, right here. And as soon as you get profit on this one, okay, you're going to move the stop as the market moves down. This would be the third trade, which is called, you'll hear him say, momentum trade. This is a momentum trade. And you'll see him start drawing the trend line first, okay, and then as the market moves down, and as long as it's on the other side of that MA1, okay, it's more of a momentum trade, okay. Now Wayne talked about, and I'm glad you mentioned this, Wayne, what does the black step line have to do with any of this, right? So let me find something that gets us to that point. So stand by here. Okay. Here's the soybeans again. We're on the 4-tick range. Okay, and what we're looking for is the market to flag, get up to the BBC, and fail. We don't know if we're going to get there, so we have to draw the trend line, right? As the market is going up, this black step line is also moving up with the market. The black step line is more of a faster moving average. So it's going to react to the price movement quicker than the MA1 will. Okay? So what will happen is the market's going to get to a point and either fail. So market will get to a point, fail, or the market's going to get to BBC and fail. All right? As long as the black step line, all right, is below the green line, the trade is on. Okay, let me repeat that. Market comes down. The market's going to get to a point and fail, or it's going to get to the BBC and fail. And as long as the black step line is on the other side of the BBC, which it's in position, the short trade qualifies. Okay? If the black line starts touching here like it did here, or if it exceeds the green line because the market decided it was going to go up, consolidate, and then go up some more, as soon as the black line crosses the BBC or the green moving average, you're no longer going to take the trade. The trade doesn't qualify. Okay? That's what happens. That's how the black step line is used. All right? So let me see if I can't find another one so you guys are clear on that.
That one will only come into play when you have a pullback that touches the BBC, and a and a good giveaway that you're going to have that happen is that example that Bert just showed you on the candle that touched, which was an up candle. The next candle was a down candle. Okay, if the next candle had been green, then that's almost surefire that what's going to happen is the market is going to pull back far enough that that step line is going to bump into the BBC, and that's going to disqualify the trade. Now, in fact, on this one, it still disqualified it, didn't it? Because when you go to buy the open of the next candle, it's already touched it.
Right.
Yeah.
Right.
So on that one, it happened anyway. But just a little tip, like picture that same scenario, but with an extra green candle in it before you get the red down close. Yep.
Yeah.
Beautiful. Okay.
And then you have, this is what Dwayne's talking about, where the market's going to get back to the BBC.
Mm-hmm.
There's another green candle. All right, hold on. We have a possible trade here. There's another green candle. And what it ends up doing is it ends up getting to the point where, hey, we like this, we like that candle, but the black step line negated the trade.
And don't let the fact that that trade went on to be profitable, don't let that mess up your thinker, because we've studied this over the larger sample size, and while there will be those random instances where it still goes in your favor, most cases it is the harbinger of a much deeper retracement or the beginning of a reversal.
Right, and here's a good example of that. We're still on the bean trade. Everything looks great here. You know, we get this move up to the BBC. Okay, we have to draw a trend line here, right? Everything looks good. Looks like it's going to fail on the close here. All right, this is the break of the trend line here. Look at where the step line is. It's in the green BBC, and look what happened. Yeah, let's say you got short and just ignored it. All right, the market does come down, but eventually it starts consolidating. All right, and starts working its way back up. Chances are, if you had taken that trade, you would have been stopped out of it. So what it'll do is it'll keep you out of some bad trades. All right, you may get lucky from time to time, and you know you'll get one of these, you forgot about it, and you end up making a few ticks. But a lot of times, what Dwayne was saying is, with history, what will end up happening is the market might consolidate and actually trend higher. So you want to try to avoid those.
Another thing, Bert, like right here, if we go back on this chart that we started the last candle and back up, just, okay, you see that last pullback to the BBC right there with the, no, over here to your far right. Yeah, even the one past that.
To the right?
Yep, well, no, you were right there, yeah. Nope, to the right. Yep, right there. Okay.
Okay.
Now, guys, you see how the CFMA1 is blue and climbing? Do you have any comments to make on that, Bert, as opposed to, you know, certainly we would like to see the CFMA1 red and falling. That's more conducive to a short trade, but from a rules standpoint, Bert, what are your comments on that at all, if any?
My comment, yeah, if I was in the, if this was, if I was in the moment here, and I saw the blue MA1 sloping up the way it is, see the slope of this, how it almost looks like a 45-degree angle. My personal preference is I like everything to be color coordinated. If this is red and this is red and we get a reaction off the BBC, then that's the one I'm going to take. If it's anything blue like this, or the cycle here is starting to slope up and I'm getting some bearish indications, I'm not going to take the trade. So my comment would be is if you see something that's moving against the tide here, just go on to the next trade. Because you're on a 4-tick range, you have all day to trade, and there's going to be setups where you don't have to push the envelope and and guess and hope. So my comment would be I'd just avoid that trade altogether.
Yeah, what I call that is you can either trade with fight or flow, and fight means you know that CFMA1 could be good support, and so that's the fight. You've got to fight your way through that thing for your trade to succeed. Whereas if everything is red on a short trade, now you're more going with the flow. So fight or flow.
Yeah, there's enough. Yeah, that's actually a good example. Another momentum trade. Just again, this is another buzzword you'll hear in the trade room, a momentum trade, where again everything starts with the cross, which this started here. Okay, the market has so much weakness, it's staying under the MA1. Okay, you'll see Michael grab the trend line, start drawing his trend line, and we have a break of the little trend line here. Okay, once it goes a tick in your favor, you're supposed to move it down to break even. This isn't the perfect example, but is one that qualified on the momentum trade. Okay, so you'll hear that from Michael a lot. Momentum trade, divergence, a regular slingshot trade is another phrase he'll use. Those are the kind of phrases you'll hear inside the room. Guys will ask me a lot, well, Michael has, 6 charts up. Is that the only ones that these use? Are they the only ones I could trade? Well, absolutely not. The same rule set applies to any market you're interested in. I just showed you grains, a few indices, crude oil. Guys, I know we're trading this. I think Michael was trading the 6E. The currency was really rocking and rolling today, so they were trading the euro currency. Mm-hmm. So it's not centered around the 6 markets that Michael has on the board. It's any market that has some liquidity to it. Okay. So just keep that in mind. What is my opinion of market profile?
I would say that it has merits, but that it's not a complete solution. So, Bert, I would like to hear your thoughts as well.
No, I got introduced to it, probably 10 years ago, and it really caught my attention then. I really, I don't have nothing good or bad. I mean, I don't have anything bad to say about it. I don't use it in my own personal work. I know some things about it, like the point of control, and then everything's on a bell-shaped curve, and but I just don't use it, Michael. So I wouldn't say anything bad about it.
One of the things you'll hear us say is that our methodology embraces the underlying rhythm of the market. Okay, and you'll then hear me say that based upon what we found and how it's demonstrated in whatever market we apply our methodology to, that it's not something that will ever break or go out of style, because as long as there are buyers on the bid, sellers on the ask, and price is channeling back and forth between the two, it's always going to quote unquote work. It's almost like a law of nature. It has no choice but to work. And that terminology that I use with buyers on the bid and sellers on the ask and price, that sounds kind of market profile-ish, and it does embrace some of the tenets of market profile. I have a good friend. He and I were learning to trade E-minis together way back in 2005. Fortunately, well, I won't go into the downside, but I'll just say that when we left our first guru and went out on our own, I went in one direction and he went in the market profile direction, and he's been happy with that. He knows that it doesn't, answer all the questions, and I mean, we don't pretend that ours is the holy grail, answer to everything. But it is a solid set of rules that if you adhere to them on a regular basis over the larger sample size, you can find if you are consistent in the application, you'll start to see consistent results. And we do look at it as a business, trading, and the more you treat your trading like a business, the more it will behave like a business, and the more it behaves like a business, the more business-like results you will get from it. If you go and invest in a Subway franchise, well, you expect over a period of time, to turn a profit, receive a stream of revenue from that investment. You should expect no less from your trading. I talk to people all the time that have been trading 3 years, 5 years, 7 years, and have still not become profitable. And so if that's you, put the brakes on. And I often, some of the people I talk to, it's been all this time and they're trading live. There's no reason to bleed out on the trading floor. Get into sim, get yourself a good set of rules. I think ours are just fine, but if they don't fit your personality for some reason, find a good rules-based methodology. Stop shooting from the hip, because you can turn this into a business and you can learn over time to be a trader. It doesn't happen overnight, and you don't have to learn 50 million different things. You don't have to check, and I'm not against any of these things, but I'm just saying to put on a profitable trade, long or short, does not require that you go check the trend, the tricks, the advanced decline line, or 9 other different things. It simply means that you need to be able to look at your chart, read the indicators, and have enough faith in the methodology that you're using, whatever that is, to know that when there's a long setup, you don't hesitate, you simply take it, and when there's a short setup, that's one thing about our methodology, is the setups are clearly identified. Okay, you know when it's a long, you know when it's a short, and you know the entry price to the tick. There's nothing ever nebulous or ambiguous. You always know to the tick. Now, if the market gets to moving too fast for you to keep up, just put the brakes on. Don't go chasing it. Don't jump into a long 3 ticks late, because that you may have already seen half of whatever profit there was going to be in that trade. It may have already passed you by. So just as Bert said, there's so many opportunities over the course of a day. Be patient, wait, and the next trade will come to you. As we wrap up here, guys, it's the top of the hour. Let's see, do we have any questions that have not
just one here. Matt, yeah, the thing I would do is, I think you're looking at this correctly. You do have the bearish cross here. I would start drawing the trend line. That should be automatic. And now what you would be looking for, the fact that this is red, all right, so now it just turned blue, right? This is a great example, Matt. Just turned blue. So this is why you draw the trend line. Because now at this point, the market's going to have to close on the other side of this trend line therefore this qualifies to get short. Okay? And my gut feeling is if the market continues to climb, the black step line is going to pierce this BBC, and it's going to disqualify it anyways. So, Matt, I think you're looking at it correctly. So that's a good start, that's for sure. Yeah, Arvind, I know Michael was looking at the euro a lot today. So, you know, I could cite plenty of examples here for you. But euro currency trade, I don't know. I didn't even touch this thing today, but regardless, here's the bearish cross.
Hey, Bert, I have to go to a mentoring session, so I'm going to leave, but you're an organizer, so whenever you're finished, you can just close the room. Okay? And guys, I'll see you all tomorrow morning in the live trading room. If you have any questions for me, email support@cfrn.net. Bert, thank you so much, and please just keep going, and whenever you close the room down, that'll turn the recording off, okay?
Yep, no problem.
All right, thanks so much. I really appreciate you coming and helping the guys out today. It really means a lot.
Yep, no problem. All right, so Arvind, we have the bearish cross, so you should get excited about being short. We have a pullback, all right, to the BBC, all right.